University of Missouri Extension economist Ron Plain is our hog market analyst this week. We talked with Ron Monday afternoon about the continuing impact of the porcine epidemic diarrhea virus, the U.S. dollar's impact on exports, and his reaction to the USDA's recent quarterly hogs and pigs report.
Well, Jeff, it's kind of interesting. The trade was a little bit more bullish and expected lower inventory numbers than USDA gave us. USDA said the market hog inventory was down 2.7% and breeding herd up 1.8%. And not quite as small a numbers as the trade was guessing. But as it turns out, USDA's numbers in September, this last report, match up very, very closely with what they'd forecast back in June.
That pigs per litter number of 10.16, is that what you were expecting, or were you seeing something else?
Well, it was a bit higher than the trade guesses. The two previous quarters we'd been down 5.5% and then 5.1%. So the down only 1.6% isn't as low as we thought, but it's certainly the direction. PED has been much less of a problem this summer, and so our expectation is that when we get the data out for September, October, November, pigs per litter, it'll be even higher than it was back in the summer.
This report, does it change at all what you expect to see when we get to 2015 slaughter numbers?
Not hardly at all. We're looking for a little over 3% more hogs to be slaughtered next year than this year, right at 110 million head, between 110 and 111 million head. Again, that was in line with what we thought after the June report, and looks like it's going to keep hog prices high enough to keep the profits rolling through the end of next year.
So you mentioned the porcine epidemic diarrhea virus. Is it safe to say that the industry is better equipped to handle it this winter as opposed to last winter?
We sure hope so, and we think so too. Over half the herds have already had the disease, we believe, and so there's a lot of sows that will be carrying immunity. We've got 2 vaccines on the market that seems to help boost that immunity, so we're certainly expecting pigs per litter to be higher than what we had a year ago during the winter months.
Over half the herds or over half the states?
Over half the pigs, half the sow herd. I'm not sure it's actually over half the herds, but we think over half the sows in the country have now been exposed to the PED virus.
Wow. How much is the U.S. economy right now weighing on domestic meat demand?
Actually, the economy's been doing better, and that looks good for meat demand. The unemployment rate continues to decline, and so with a stronger economy, usually meat demand picks up, and meat demand has been up for, I think, 21 of the last 22 months, so we're headed in the right direction there.
Can you explain the recent strength of the dollar and how it's affecting the export market?
Yes, concerns about other economies around the world has caused people to invest more in the dollar. The dollar is quite strong relative to the previous 12, 18 months, and so that's good news. If you're importing things into the United States, it makes it tougher to export, and since agriculture and pork in particular are big export industries, it's a little bit worrisome.
What does trade data show for pork?
Well, we're up over 3% through August in pork exports, and that's kind of surprising with the big reduction in hog slaughter this year and with record high hog and pork prices. It still shows good demand. Mexico is the big growth area for U.S. pork exports.
All right, what are your price expectations here as we move through the month of October, Ron?
Well, seasonally, we're probably going to see prices decline. We've been a little over $100 on a carcass weight basis here. At the start of the month, we'll probably see that decline into the low 90s before the end of the year, maybe even the upper 80s before we get to New Year's Day.